Hi friends, welcome to Insurance Decoder, and in this video I will tell you about Jeevan Anand Plan of LIC. This is plan number 915. This plan was earlier launched as plan number 815, but subsequently on 1st February 2020 there was some addition in the plan and it was renamed as plan number 915. In this video, you will get to know about the details of the plan. This plan will help you in your investment related requirements, and it will also provide you whole life insurance and tax savings and loan facilities. So in all, this plans covers everything. Now, what is the endowment plan and what is the whole life plan? In the endowment plan, on maturity, you will get the maturity benefit. Thereafter, the plan will not stop. After maturity, you will also get insurance for whole life. So this will solve the entire purpose. Maturity plus whole life insurance. The minimum age to take this plan is 18 years and the maximum age is 50 years. Maximum maturity age is 75 years. So your policy shall not exceed above 75 years. That means if your age is 50 years, you can take a maximum policy of 25 years. 50 plus 25, 75 years. And the minimum policy term is 15 years and the maximum policy term is 35 years. Minimum sum assured you can take up to 1 lakh and thereafter in multiple of 5,000. That means 1 lakh, 1 lakh 5,000, 1 lakh 10,000, 1 lakh 15,000 and so on. And there is no limit for the maximum sum assured. However, the maximum sum assured depends on your financial capacity and other factors, and it is also depend on the underwriter's calculations. And the premium payment term is as long as your policy term. So if you have taken the policy for 15 years, you will have to pay the premium for 15 years. And if you have taken the policy for 35 years, you will have to pay the premium for 35 years. Now in this policy, you can get the accidental death and disability rider, and you can also get the accidental death benefit rider, and you can also get new term insurance rider as well as new critical illness rider. What are these riders? I have made a separate video. You can watch about those videos and you will get to know what are these riders mean. Now let's see a hypothetical example and try to understand how this plan will work. And in the first, we take the example where the policyholder remains alive till the maturity. Sum assured we have taken is 5 lakh and policy term we have taken 35 years. The investor's age is 30 years. He takes the policy and he pays the premium for 35 years because the policy term is 35 years. And in this policy, the premium payment term is equal to policy term. So premium will have to be paid for 35 years. The premium will be around 15,900 for yearly premium, and it will be 1,350 if the premium is paid on monthly basis. Total premium payment, that means 15,900 multiply 35, that is 5,57,000. So during these 35 years, the investor will be paying around 5,57,000 as a premium payment. Now at the age of 70 years, policy will mature because 30 years, here the investor's age is 35 years. I have wrongly written is 30 years. So at the age of 70 years, the policy will mature, and when the policy will mature, the policy holder will get the maturity benefit and the total amount will be 25 lakh. So this 25 lakh will include sum assured of 5 lakh, bonus of 8.50 lakh and final additional bonus of 11.50 lakh, and the total three components will be equal to 25 lakh. That means in simple word we can say that the investor has paid 5,57,000 and he is getting 25 lakh after 70 years. The policy will not end here, and after that before that, if you want to take this 25 lakh in installment, you can take it in installment of 5 years, 10 years and 15 years. So if you have opted for 10 years installments, you will be getting 3.21 lakh every year for next 10 years. That means effectively you will be getting 32 lakh 10,000 rupees in next 10 years. That means LIC is paying you interest if you are opting for the payout in installments. The policy will not stop here. Thereafter, after 70 years, you will not have to make any kind of premium payment. And when your age reaches 100 years, then the insurance company will pay you the sum assured amount, that is 5 lakh rupees. So from that 70 years till the age of 100 years, or the age when the person dies, suppose the person dies at the age of 80, then his family will get 5 lakh. If he dies at the age of 90, family will get it 5 lakh. If he does not die at the age of 100, then when the insurance holder reaches 100 years age, the insurance company will pay him 5 lakh rupees, and the policy will stop. So this is how this policy will work. Now we take the example, if what happens if the policy holder dies before the maturity of the policy. Age of the investor, say 35 years, and so he has taken the policy for 35 years. So at the age of 70 years, his policy will mature. But what happens after the 10 years, that means at the age of 45 years, if the insurance holder dies, in that case, the insurance company will pay the 110% of sum assured plus bonus. So here the sum assured was 5 lakh rupees. So 110% of 5 lakh will be 6.25 lakh plus 2.45 lakh will be the bonus. So bonus will keep increasing as the policy increases. So if the person dies after 15 years, then bonus amount will be higher. This 110% of sum assured will be same. So in this case, the lump sum amount approximately would be around 8.70 lakh. This data is based on the past records of LIC, how it has worked, and this policy will terminate. Now, if the person does not die at the age of 70, and if he dies any time after 70 years, then at the age of 70 years, family will get the maturity benefit. And after the 90 years, if he dies, then family will get the sum assured amount, that is 5 lakh rupees. So if he dies after 70 years, family will get the maturity benefit at the end of 70 years plus 5 lakh rupees. If he dies before 70 years, then the family will get 110% of sum assured plus bonus. This is how it will work. Now the features, this policy provide you the tax rebate on premium payment under section 80C of Income Tax Act, and the premium payment frequency can be monthly, quarterly, half yearly and yearly. So depending on your financial capacity, your requirement, you can opt any of the 4 modes of premium payment. Grace period 15 days for monthly payment, and if you are opting for the quarterly, half yearly and yearly payment option, then you are given a 30 days grace period. Now comes the loan on policy. You are eligible for loan on policy after 2 years, and that loan amount will be up to 90% of surrender value. Policy surrender, if you want, if you do not like the policy, you can surrender the policy after payment of 2 years. So before 2 years, you cannot surrender the policy. After 2 years, you can surrender the policy. LIC will give you the surrender amount. The policy revival, because of any reason, if you have stopped paying the premium and thereafter subsequently you get to know that you need to pay the premium, you want to revive the policy, you have the option of 5 years. So within 5 years of last payment, you can go to LIC, you can pay the remaining premiums with interest and penalty whatsoever, and thereafter you can get your policy revived. Maturity and death claim benefit procedure. The maturity or death claim can be taken into a simple one lump sum payment, or the person wants, he can go for the 5, 10 or 15 years installment option. Here one thing need to be kept in mind is that if the death benefit is to be taken into installment, the option needs to be exercised by the insurance holder before he dies. So this option is with the policy holder only. The nominees do not have the option that they can take the claim in lump sum or in installment. Whatsoever option the policy holder has exercised, the LIC will make the payment accordingly. So friends, that's all for the policy. I hope you like the video. Please don't forget to like the video, and like, subscribe and share. And if you are not subscribed to my channel, please subscribe to my channel, click on the bell icon and select all notification. Thanks a lot. Keep watching Insurance Decoder. Have a nice day.